Michael Corbat, Citigroup CEO. Let's begin. The one thing we haven't talked much about so far today is the global economy. Citigroup you have offices in 160 countries. You probably have as good a view as any. And you recently said on an earnings call, right now we see the biggest risk in the global economy is one of talking ourselves into the next recession, as opposed to the underlying fundamentals taking us there.
Yeah.
Can you explain a bit on that?
Sure. So, as for many years coming to Davos, you typically, I know I do, prepare by thinking about what are going to be my takeaways, what are the topics going to be, and I think as we think about this year's Davos, I'm sure that many people have arrived here with the question of what's right. Are the markets right, as we saw in December, and truly predicting a significant slowdown to recession? Or are the fundamentals that we're seeing in employment and wages and purchasing and all those pieces, housing, coming together for what feels like a reasonable economy? One of those we know is wrong. And so I think what many of us here are trying to figure out over the next week is which of those are right and what's the trajectory going to feel like as we go forward.
And you haven't seen any softening in the real economy from where you're sitting?
Well, I think,
a little bit.
When we go back and look, and you can go back and look at the evidence, if we go back several years, economists were predicting pre-tax reform, pre-many things, that actually the economy would likely plateau in 18 and have, some minor givebacks in 19 and 20. I think that's been reaffirmed by the IMF yesterday. We saw a couple tenths of a percentage point come off of growth, but we actually saw a leveling out into 20. So they're certainly not predicting this rapid decline into recession that in many ways the markets are predicting. And so which of those is right?
Now, are there particular economies which you're more worried about in that panoply? Are there places where you see softening, and are there other ones where you're more optimistic? If you're one of the people out here deciding where to put their money or where to loan their money this year, where would you be looking?
I think we've got to look at the world today through a few different lenses. So one would be the fundamentals. And if you think of fundamentals, I think there's a couple things that we need to pay attention to. One is that...
One of the fundamentals.
One of the fundamentals, get a good microphone, is as we look at the world, where are some of these economies and what's happening? And as we look across the world, simplistically, we break the world down into three strata: the consumer, business, and government. So one is, as you look at these countries, what's the state of the consumer? And I would say globally, we see a consumer in pretty good shape, right? To a consumer or to an individual, what are the things they pay most attention to? My job. Do I have a job? If I don't have a job, what's my ability to get one? My wages in that job. And the second, certainly in the US or many places in the world, my single biggest investment is my home. And I think as you look not just in the US, around the world, in pretty good shape. And if we look at the data coming out as an example from in the US, holiday sales, while maybe some of the big box retailers suffered, actually spending up 5% plus.
Do you worry about the shutdown at all on that?
I think I worry about it from this point forward.
Yeah.
Clearly, I'm worried about the people in terms of the hardship that it's created. Your question is from an economic perspective. We're now entering the second pay cycle. We're now entering, beyond a month of the SEC being closed. We're now beyond a month in terms of certain very important goods or services not being offered. Second piece is really around business. And when you look at business, here we are, we're 20 days into earnings season or whatever we are, 75% of the companies that have reported have actually reported above expectations. That doesn't feel like a business environment that's falling off into the abyss. And if you look at those companies, they're generally relatively conservative, good management on costs and other things, et cetera. I would say the flashing amber light today is on that third level, on that government level. Right? And when you think about what's gone on, 10 years of quantitative easing, lack of fiscal reforms, lack of fiscal follow-through, and the question that we're going to be facing is, are these economies sustainable? And so if you ask me, if you ask us where challenge comes from, it comes from a lack of credibility up at the governmental level and manifesting itself in a diminution of confidence that undermines the economies underneath that.
It's very interesting. On the one manifestation of government problems in this would be the trade war. How much does that worry you? And is that something which you could see stretching throughout the whole of this year, or is it something that gets solved at least on the tariffs basis, or is Trump, as I probably believe, really committed to taking on China?
Well, I think one is when you look at the world today, really the bookends of the global economy, in many ways are the U.S. and China, two of the larger economies. Clearly, Europe's important. And I think anything that causes pause or moves to undermine the confidence of the trajectories of those economies has ramifications around the globe. And so I think what we've seen, the numbers came out yesterday or day before, China growth, fourth quarter 6.4, full year 6.6. In terms of a slowdown, I think we've seen the Chinese government acting fairly aggressively in terms of lending and tax cuts and other things to try and keep the economy going. But it seems like for a series of reasons, with trade being one of those, the China economy has slowed.
Now, from the point of view of a bank, in some ways, are you at least slightly on Trump's side because he is opening up the market to you?
Well, we've been in China, and we've been in China under our own brand actually for a while.
But in general, most banks have had a very rough time there.
I think in the president's approach here, he's trying to create a balance to trade. When you look at trade agreements, things that people miss is many trade agreements are not only decades, but they're beyond decades old. And when you think about the evolution that needs to happen in terms of fairness and balance, when you go back to post-World War II, when many trade accords were set in place, it was democracy versus communism, and I'm going to offer you this to pull you my way. And in some cases, those trade agreements have not evolved. So one is, I think that like any contract or anything over time, it needs a fresh look. I'm not going to comment on approach, but I think in terms of the balance and things that they're going after, that also, John, I believe is important because politically it's manifesting itself in this form of protectionism, which not just the U.S., but most places in the world expect their politicians and their government to go after.
Can you see echoes of that around the emerging world? I mean, as you said, we focus on these two bookends, but is the Trump trade war, whatever you want to call it, the China-US spat, from your perspective, you have branches in all these countries. Are you beginning to see waves coming over into other places?
I think what some people have described as balkanization, where, again, when you think about these economies, and I talked about this challenge at the governmental level from a fiscal perspective, employment is important. And if my country, whoever I may be, are losing jobs cross-border or whatever is the cause of those jobs leaving, you're likely to get a societal backlash against that in terms of wanting to keep those jobs and keep their people employed. So I don't think it's a developed markets phenomenon. I think it's a global reality.
Perhaps we can talk about my country, where the government doesn't seem to be doing that well. You have 9,000 staff in the UK, and you've talked about putting a few of them in different places. Do you see any answer to the Brexit phenomenon?
No, I think it's, from our perspective, I think it's likely that we'll go down to the wire. In some ways, we've got three very different views or opinion of where this should go. And certainly from Citi's perspective, I think from the industry perspective, and I'm sure from many businesses, we've had no choice but to prepare for the hard exit. And it's likely we will come down to the wire. Hopefully reason will prevail and we'll strike a balanced outcome for each of the parties. But it's in some ways a difficult situation.
You're the kind of quintessential global banker. Do you think less of London now than you did a couple of years ago, pre-Brexit?
Well, we'll just the outcome will be that we will be doing less there. So when you look at our business there, about a third of our business is UK related, about a third of our business is Europe related, and about a third of our business is rest of world. So without a doubt, it's likely we will be forced to move our European piece to the continent, and we've prepared for that. Obviously, we will continue to do the UK piece in the UK, and then we'll see over time what evolves around the other piece.
And on the hard exit, you run the numbers on that, and do you have any idea how much that would cost you?
Cost the firm?
Yes.
Yes, we don't share that. but it's not. As you can imagine, you have to recreate. I've got to go recreate a new entity in Europe, and I need the risk and compliance and people and kind of all those things to be able to do that. So it's not it's not going to be a cost-neutral outcome.
Just jumping into the Eurozone at the moment, one theme here is you talk to the bankers here. There was a lot of talk about consolidation, with finally Europe beginning to talk about having national champions in finance, those sort of things. I'm interested in your perspective from two angles. One, you were in charge of the bad bank at Citi, and I think Citi has cleared up, I think, $800 billion worth of loans. Yep. Bad stuff has got out. Why do you think the Europeans have not done as much of that?
Well, I would say two things. One structural, one environmental. So coming out of the financial crisis, the U.S. financial system, the regulators moved quickly, capitalization, et cetera, to give the banks the ability to act, to kind of solve the challenges in a fairly short period of time. And as you referenced, ourselves, others were able to do that. I think the model in Europe was one more of time will heal, and these banks will be able to earn and grow their way out of the challenges. I think the structural issue that's challenged that is the consequence of low to negative rates. Right? We would not describe that as an environment that is highly profitable for banking. Right? When you have negative interest rates, and it's very difficult to kind of pass that through. And so I think the earnings trajectory of the European banks has been shallower than people expected. And I think as a consequence of that, the European banks have had less flexibility over that same time period.
And would you now expect to see consolidation? Surely that begins to make sense.
I think the industrial logic is certainly there for consolidation. The question is, do governments and regulators want to allow it to happen? And we don't know because we haven't seen it. We hear talk that the European regulators are ripe for that consolidation, but in the end, there's always a nationalist pride around having a national champion or a series of national champions, and we'll see how the politicians and regulators come out.
If you look at the world of banking rationally, and it was a normal global industry, you would be a potential acquirer. It's possibly more difficult because of politics. Do you find that a difficult barrier?
Yeah, I don't. While I say that for Europe, I also believe that in the U.S. today, there's probably not much appetite for the big banks to get bigger.
And is that a mistake?
I think over time it is. I understand coming out of the financial crisis, the sensitivities, but I can go at not just banking. I can go at other industries. I can go at things we've done environmentally as an example, where we have interceded in terms of the natural course of things, and we've had to go back to fix that. And if you think of a healthy banking system today, it's not small bank versus big bank. It's banks that are scaled to serve their clients. And we need community banks and regional banks and national banks and global banks. And as soon as you start artificially stimulating or limiting the outcomes of those, I think you're creating a suboptimal outcome in terms of trajectory going forward.
There are many people here who come from the tech field. Everyone's looking at the area of finance and saying, well, this is an area which fintech can disrupt. Another group of people say, look, they've never really lived through a crunch.
Yeah.
Which side of that debate are you in?
Well, I think one is we've got to recognize that fintech, or more importantly, what I would describe as the digitization of banking, is here to stay, and not only here to stay, but here to accelerate. The analogy I use is I'm out in Silicon Valley or around the world meeting with fintech companies, and the conversations in some ways has evolved a bit. Right, that I remember a meeting probably 4 or 5 years ago while I was there, and a young tech person was sitting in front of me and basically sat across the table and said, "I'm coming to eat your lunch, old man." And I said, "Listen, I'm not dismissive. I'm not dismissive at all. But anytime you really want to trade at an 8 or 9 times multiple and be highly regulated, we'd love to have you in the industry." But what I've seen, or the positive that's really come from this.
What has happened to that young person?
Yeah, so as I say, what's really come from that is a different approach, and that is that think about that fintech company that has come up with technology, it can do something well, and can bring it onto our platform and touch 140 million clients around the world in 100 countries, and we can scale them on day one.
So you bought him?
Well, we don't buy them. We don't buy them, but we're happy to partner with them. We're happy to pay for and buy their goods and services. We actually don't think that those companies should exist inside of ours. We have our own development, and we spend a lot of time and money on it, but we want the outside world. So we're happy to buy technology, we're happy to partner technology, and we're happy to invent our own.
Some people, when they're looking at the year ahead, talk about this being a year when fintech could come under some pressure, particularly on that credit risk side, the idea that these are people from Silicon Valley rather than people who are used to lending money on a continual basis. Are you worried about that at all? Have you changed your
I think what people are speaking to when they say that is that the models need to be tested, right? We haven't been through a cycle. And so in some ways people have cited that they're doing new and different and really interesting ways of underwriting credit. We don't know how that's going to perform, and we'll see. And so like any of these, we simply need to test them over time. And when the cycle turns, at some point it will, they'll be tested. There'll be lots of learnings in there, and they'll continue, I think, to be a very positive evolution.
It's only fair I give you a chance to come back a bit on what, Stephanie, when we were talking about diversity, and you, I think, rather bravely in some ways, came out and said what your pay gap was around the world, which I think was 29%. And people, you could hear a sigh, a sort of gasp as people here thought about that. And obviously it matters a lot when you compare jobs, individual jobs against individual jobs, but how are you aiming to change that? And what kind of, is there something difficult about finance and women?
Well, one is I think that Peter and Stephanie and Ann and Dina did a terrific job, really great job in terms of laying it out. And I think as we've looked at the issue, I think there's a couple things that we've been focused on. One is there's just the big number, right? And there's the number of, so we have 210,000 employees around the world, and over 50% of our population is female. You could say, well, job done, let's go home. But we actually, and Ann and Dina were describing the journey, you've got to get below that. And what we did is we started around looking at pay equity. And that is, we have two people, a man, a woman, in the same job, similar backgrounds, whatever they may be. How are we paying them? And as Ann described, you identify those and where there are imbalances. As soon as you identify them and turf them up, they get solved very quickly. So a year ago, we came out, and we went at the US, the UK, and Germany. We cited our imbalances, and today they're fixed. We came out a few days ago, and we said that we have now completed it for the rest of the world. In terms of the other 97 countries that we operate in, we've reported the number, and that we're committed and we'll close that gap in very short order. We also came out then with a number that you described in terms of women in city getting paid 71% of the males. That's what we would call a raw number, because they may be doing very different things. But what that number really shows is that we don't have an imbalance at the firm level, but we have an imbalance in particular at the senior job and leadership level. So what we followed up on that is by then setting hard goals in terms of the evolution of the leadership of our firm and where we're going to get to over time, both women and US-based minorities, and we've set hard targets in terms of where we want to get the firm to 2021, and we will keep evolving that to fix it.
I think on women it's up from 37% to 40% of the management.
Correct.
And do you think, though, that there is something that banks find difficult about this? It's interesting, actually, in some ways, that you're the people who've come out and said this very boldly about everything. Most people have shied away from giving that big number.
Well, it's an ugly number.
Yeah.
Right on the surface, but you really have to get below it. And you can't fix it till you get below it and until you acknowledge what it is. And again, we don't have an imbalance at the firm level. We've got an imbalance at the leadership of the firm level, and you're not going to fix that overnight. You can't go out and hire externally to fix it, and you can't simply solve it just organically forever in terms of getting there. And so it's the balance. So as was described in the last session, you start to build those metrics into how people are evaluated, and we have a saying in the firm, you are what you measure. And if you're measuring and holding people accountable against the right things, you will get the right outcomes.
I should say every large company, including Bloomberg, is struggling with these things as well. But is there a sense, is this something you look at as in terms of something that will change in the next year or the next decade? Or what is the rough parameters for when you'll really see big changes in those numbers?
Well, in there, one thing we've recognized is so today we can and we have set, as other firms have, when we hire, that our classes are balanced. Right? That we're 50-50 or whatever the right ratio is on the way in. Then the question is, can we actually create the right environment so that we're not simply through attrition becoming imbalanced again? So can we create the right work-leave programs? Can we create the right benefits? Can we create the right atmosphere where we've got the ability not just to attract, but to retain those people over time? Because that's the only way you're going to fix it. You're not going to fix it in the short term, and you have to have the right long-term trajectory to get the numbers balanced.
And in general, do you tend to think you're stronger in terms of where you're getting in terms of gender than you are in terms of race? Is that a fair comment?
I would say the industry's behind on both, and trying to play catch up. So I'd say work to do on both.
Is this something you all talk about as the heads of the big banks? You come together and discuss this?
Yeah, I have the pleasure of kind of sitting on the 30 panel with Peter.
Yes.
And it's not just the banks. It is the business community at large that's taken this seriously. And as was said, I think a lot of progress has been made, and I think there's certainly acknowledged more work to do.
Can we finish a bit on Citi and you? If Citi, Citi the next year, again, you'd be hoping to increase profits, all those things. But again, looking a little bit beyond just the year ahead, Citi once was perhaps even bigger. Is there an aim to take it to a much larger scale? Do you want to be in even more countries? Do you want to be? You are the closest thing in many ways to the global bank we have, with the possible exception of HSBC. Do you think you can be even more global?
Well, we went into the crisis operating in 100 countries, and this morning we opened in 100 countries. So while we've changed our business mix and while we've continued to refine the clients we serve, I think we're quite comfortable and like the business model we have. It certainly at times has its challenges around globalization or anti-globalization. It has its challenges and benefits around trade and those types of things. But I think we're quite comfortable with where we are and the things we're doing. And for us, it's to make sure that in these challenging times as we go ahead, that we're there being able to serve and provide value to our clients.
Do you ever worry on that subject of globalization? Your career, we've had this long period of globalization gradually expanding. We talked about trade wars earlier. We talked about nationalism, banks, and all these different things. That era is coming to an end.
I think it's very hard to put the genie back in the bottle there. We've talked about the world being flat. We've talked about globalization, digitization, the speed of information flow, the fact that not all natural resources exist everywhere. And so I think global citizens have become accustomed and have the expectation around access to the free movement of goods and services. And so, again, I think the politics and other things will try to put some barriers along the way, but I don't think we can go backwards on that.
Can you imagine big global banks coming out of China and places like that? I mean,
coming out, meaning?
Kind of emerging from China on the same... There are big banks in China, but they tend to be very domestic.
Yeah, and so just to put that in context, if you think about the 10 largest banks in the world, the first four are Chinese banks.
But they do not have your reach.
They don't have our reach, but we know around Belt and Road Initiative and other things, and Chinese champions moving around the globe, that it is likely they will be following them to those places, and I'm sure there'll be good competition.
And from Europe, will there be a bank that emerges to sit alongside the big American banks?
Listen, I don't, and I never would discount the European banks. Again, they're in a different phase of recovery than the U.S. banks, and so one, don't overestimate the U.S. bank position and don't underestimate the European bank's position. And I think what we've seen really is a refinement of strategy, not just in Europe, but around the globe. It's not these days of be all to everyone, but I think a refinement of strategy of being in the areas where you can compete, and over the intermediate and long term, you can provide real value add. And I think you've seen all institutions around the globe pulling back to strategies that really encompass and embolden that objective.
And would you advise younger people now to go into banking?
Absolutely. I think that there's never been a more exciting time. You know, if you think about where we are really at the point of writing the next chapter of banking. I think this whole move to digital and information flow and data and client privacy and all the pieces is really exciting. And I think you're going to see banking evolve very quickly as part of that.
And do you think the opprobrium that bankers, to some extent, you've had to live with, you've seen it happen to other people as well, do you think that will change as maybe technology becomes more important?
Meaning, I'm sorry?
In the sense of finance at the moment is not enormously popular, maybe a little bit more popular than it was 7 years ago. But is there a way in which finance, maybe as it changes in the way you've described, that it will become more loved?
Well, I think coming out of the crisis, banking in many ways kind of became the headline or the go-to industry for the crisis. And again, you know, the industry, we certainly did things that we shouldn't have in hindsight. And I think as we go forward, we're all very mindful, not just in terms of what we come to do as work as part of our base function, but the broader things we do. And again, if you go back and think about history and society over time, I challenge anybody to go back and find a society that operated at its full capacity and full ability when its financial system and its banking system wasn't in a place of being supportive and being embraced by the broader society.
That's a very good vision to keep for Citicorp, maybe also for Bloomberg and for many people here. Michael Corbat of Citigroup, thank you very much for speaking to us.
Thank you very much.